So yeah, you wanted to first introduce the group and then start and talk about the investment. Is that correct?
I basically wanted to say, when you said that it's more than 5 years of my PMS, I just wanted to say that, my journey started much earlier. So I joined Wallfort Financial Services Limited in 1997 when I was 17, which is a financial services company which is owned by my family only. And first, I worked at the family office division for 10 years and then moved on to the institutional side for 10 years. So, after a 20 years experience in the stock market, I started the PMS in 2018-19. And yeah, so the outperformance which you spoke about for last 5 years, the credit goes to the 20 years which, I worked uh, at the company side. So that is how the outperformance has come. So yeah.
Okay, great, great. Wonderful to know this. So maybe if you can allow me to talk to you about your childhood and your studies, and then maybe your post graduation time and how did you enter into this? Maybe if you can share your experience and then we'll
Absolutely.
get into that. Yeah.
I was born in 1980 and I completed my 10th standard in 1996. And as our Gujarati Marwadi families, they usually send us to office after the 10th. कि घर पे क्या करेगा. So that is how the journey started, where my brothers had already started this journey in 1987. And we, in 1994, we got our first card. In 1995, we got listed on the Bombay Stock Exchange. And there were two verticals when I joined. One was the family office and one was the institutional desk. So first I joined the family office, and there I looked at companies, learned from my brother how to look at companies, what matrix to apply to what sectors, and he was always investing in small and micro cap companies only. So under him, under his mentorship, I learned how to look at companies, sectors, and what matrix to apply on what sectors. And post that, after 10 years there, I moved on to the institutional desk, where we were empaneled with over 110 institutions, all mutual fund, all insurance companies, all banks. So I spent almost 10 years there servicing all the possible CIOs and mutual fund managers there, and learned how they look at companies. And it was completely different as a family office and completely different as an institution. So after learning and looking at both the verticals for 10 years is when I got very inclined to manage outside money, which we never did till 2018. So we were always a family office and an institutional desk, but we never managed outside money. So in the year 2018-19, I told my brothers that I want to pursue this, and eventually convinced them. Started very small, and we started with around 20-25 crores of corpus from close family and friends, and then slowly grew it without a distributor for 5 years, and our CAGR was close to 40-45% for 5 years. And
True.
then last year we got associated with few good distributors like yourself and few others, and yeah, the journey has been very good, and we've reached 700 crores as we speak. And we are amongst, for last 2 years, 3 years, 5 years, we are among the top 5 PMSs in the country, and would like to continue to do so.
Right, right. Now I want to go back before we come to the performance side. So did you also had an empanelment with some of the FPIs in India? I mean, those who are registered.
Yeah, so we had few FIs, FPIs. Earlier they used to be called FIs, and then recently FPI. So yeah, we were empaneled with a few of them. But yeah, I mean, the experience before 2013 was different, and post 2014-15 was different with them also. So
Yeah.
the mindset, everything, the way things changed after 2014, once BJP government and Modi ji came in power, were very different and very relevant. But yeah, I mean, last few years have, whatever money they invested then, they are mostly exiting all of it because the valuations are expensive as compared to the other geographies of the world. But again, I believe India's story is here to stay for next 10 years, and the kind of money you will be able to make here being the smallest, youngest population and the kind of demographics we have, I think volatility will surely be there. But yes, if you are able to invest in right companies at right valuation, there's a lot of money to be made.
Right, right. No, so when I had a word with Aniket, so I was telling him, and I was behind his life in terms of getting this, arrangement done in terms of distributing your EMS. But what was the reason that you wanted to keep it only for your friends and family?
So we as a family are very, very conservative. As I told you, we have never borrowed money, we've never lent money, and never managed outside money. So the scare, because the markets are volatile, and we have seen 2001, we've seen 2008, we've seen 2013. So my family was also very, very scared कि मार्केट में पैसा इन्वेस्ट करना एक बात है, उस पर रिटर्न बनाना अलग बात है, मगर जो वॉलेटिलिटी है, एंड देयर आर मेनी कंपनीज व्हिच गो बस्ट आल्सो. So that answering has something, answering the clients is something we've never done. We've always been an institutional broker and a family office, so they were a little skeptical, and I also, being brought up in that same environment, was also very, very skeptical. The kind of uh, commitment I take from clients, and the kind of disclosures I give to the client in terms of what to expect in terms of returns and what is the time horizon and everything. I was very, very scared to engage someone else to do that. We very transparently tell all our clients in terms of what is the kind of return expectation they should have, what is the time horizon they should have, and they should expect volatility. So if a distributor does not clearly, uh, tell the clients the same thing, and that was the scare in my mind. But I think all the distributors are well educated, and they are doing a fantastic job. And after meeting you and few others, I saw that you have a similar mindset and similar time horizon, and you educate the client very, very well. So that is how I got convinced and joined hands.
Right, right. So I was telling Aniket that, look, before we offer these kind of unique offerings to our clients, the first thing that we do is to make them aware about the kind of risk which is involved while
Absolutely.
investing, and it is very important and essential, because most of the time, unfortunately, Vijayji, in our industry, people look at past track record and then they jump in. But
Exactly.
it is very, and then maybe they realized after that, and that is where, because I am in this industry for over 2.5 decades, one thing I've learned is that when people chase performance, and then come and enter, then they don't realize later that they don't have that kind of stomach to digest this kind of volatility,
Yes.
and then later on they regret, and sometimes this is how the accident takes place. Whereas our attempt is to see to it that how do we get this marriage done, in the sense that the investor, who should be a like-minded investor, should have the stomach to digest this kind of volatility in the equity markets, not particularly your offering, but overall I'm talking about. And also the fact that, deserving portfolio manager, like, like yourself, who's doing fantastic work, outperforming the benchmark year on year. And I've seen your month on month, quarter on quarter performance, because that's a part of our due diligence. And I was amazed to see, when I was speaking with Aniket and Chirag ji, is that, the performance is one aspect, but the overall quality of the portfolio is also extremely good. So let's come to the point here. I want to read your mind there. How do you construct the portfolio, A? And B, is there now the change in the mindset, because now it's not your friends and family's money, now it's public money? So is there any change in your thought? Over to you.
So I treat every client who joins our PMS as a family. So it's always friends and families money. It's never, no differentiation, no bifurcation of any cost. So I mean, that is one thing. But yeah, so our philosophy in terms of identifying companies and building portfolio is where we are a team of 14, 15 people, where 9 are in research, 4, 5 are in compliance and operation. So 9 of us predominantly read a lot, and we make sure that all the government notifications, lot of company and macro micro is what we keep reading, and where we see there is a substantial change in terms, I'll give you an example, like government is now talking about data centers and now talking about shipbuilding. We've we started talking about this a year earlier, where we knew that, government came out with a notification in 2020 to 23 saying that from 26-27 they will want all the data generated in the country to be stored onshore and not offshore. So that is going to create a huge gap between the kind of capacity we have and the kind of capacity we will require. So that is one aspect where we first have a top-down approach, where we first identify the sectors which are going to do very, very well in the next 3 to 5 years. And then we go deeper and we meet companies which are going to be able to take the maximum market share in that particular sector. So if a company is good, if the founder is good, and if they are able to walk normally also what they want to achieve, the tailwind in the sector helps creating that alpha. So first we look at the sector, then we go and meet the companies where we have a 4P strategy. So the first P is the promoter. So the founder is the most important thing, where he should have the capability, he should have the zeal, he should have the fire in the belly to grow that fast. And once we are able to, vet the founder in terms of his capability and the kind of work he wants to do, then we look at the product, then we look at the profitability, and lastly the price. But again, however sexy the business is, however good the company is, whatever the growth is, we try not to overpay, because a sexy business at a wrong valuation will not make you money. So considering all the 4 Ps, right from promoter to product to profitability to price, is how we build our portfolio. Once everything is aligned, so we meet almost one company every week, and out of that we invested not more than 1 or 2 in a year. So our portfolio, our churn ratio has been less than 5%. And yeah, so we usually, if we are not able to see clearly for next 3 to 5 years in terms of what kind of growth and potential the company has, and also see we can be associated with that company or not, till then we don't invest. So yes, it's long term investment at value and then holding on. That is what has made this return.
Okay, okay. One of the interesting thing that I've noticed, because we have month on month performance to be tracked and the portfolio. I saw that you were taking cash calls very actively, especially from last year September onwards, and even this year I saw that there were some cash calls in the portfolio. Now, is this cash call is while constructing the portfolio of the client, or you took it for all your clients?
So I don't know the cash call thing. I don't think we've taken any cash calls. I mean, last year also the maximum cash I have ever had is not more than 10 to 15%. And
I'm
right
talking
now
about
also
that
it's
only. I'm
yeah.
referring
So
to that
right
only.
now also it's 10% only. There are so many funds and portfolio managers I'm aware of. I'm not going to name any, but who are sitting on north of 30, 40, 50% cash. But in my 6 year journey, I have never sat on more than 15%, and usually I am invested. So it is between 7 and 15% is where our cash component is. But that is for those few days where you get those opportunity, like the 4th of June last year when the election result came, and for those times you keep those cash, and we are usually invested. So I think next 5 to 10 years, if you want to bet on India, so you just have to identify few good companies. I tell all my investors also, and I'm telling here also, that you and me, including this 140 crore people, are aspiring to grow. So in a country where 140 crore people are aspiring to grow every day, we just have to find 15, 20 good founders who will do better than the others. So I mean, I don't think it is that difficult. Obviously, the volatility is always going to be there, but we educate our clients enough that that is a part and parcel of the game. So yes.
Right. Now I'm referring to those percentage only, because in some of our clients' portfolio we saw that there was some cash. Maybe you all were waiting for the price to correct, or I don't know. Maybe the stock idea would have been identified and you were wanting to deploy. But coming back to point, there are some fund managers, they still feel that markets are overpriced. So I want to read your mind here. what is your views on the markets, A, and B, would you be taking these kind of large cash calls ever in the next 5-10 years? Over to you.
So as of now, from what I see and what I read, I don't think I'm going to take this. That the clients are not keeping the money with us to take cash calls that they can take themselves. So I think there is always opportunity in some or other sector. As I mentioned, okay, there are 140 crore people and doing all various things. You have to identify those few good founders. I'll give you one more interesting thing. Today, there are 5,000 companies that are listed, out of which only there are 1,000 companies which are covered and which are, researched upon and which are covered by all the brokerage houses and the funds. The other 4,000 companies nobody is looking at. So we try to go there. We try to find good founders and good businesses where we think next 3 to 5 years they will be able to come in that ambit, and where eventually they will be researched upon, they will be tracked, and so on and so forth. So we try to get them early, because that is how you get them at the valuation you desire to invest at. Because once it is identified by most of the people, the valuations are the alpha is already in the price, I think. So right now, as it is, I feel it is the time where the entrepreneurs are making more money than the investors. So they are getting the kind of valuation they desire, but investors and value investors are not getting stocks at where they desire. So that is what it is.
Right, right. So, what kind of market cap that you look at? Is there any sort of you've defined, or is there any written document that you say that, look, this is supposed to be a large cap, mid cap, small cap? What strategy, or a micro cap? What is it that you look at?
So our market cap criteria is between 500 crore to 10,000 crore, where we look at companies. Above that, no, and below that also we try to avoid. Until and unless something is very very attractive, we don't go below 500 crore. And as I said, it has to be a very very good founder, and obviously it has to be one of the sectors where we are very very bullish in the next 3 to 5 years. So if the combination is right and if all the check boxes we have kept are ticked, we can take the fund.
Okay. And how many companies that you look at, and how do you start? You start with 5%, 4%, 1%, and how what
So
kind of bet you take?
usually whatever money we get is deployed between 4 to 8 weeks, and if only it is a result time, so we try because our stocks are small caps, the volatility during the result time is very very high, so we try to avoid getting in at a high price. So we usually wait till the result and the price is settled and then invest. But when we are investing for 3 to 5 years, I don't think we look at doing SIP or investing slowly. When we are convinced the next 3 years are good, so we cannot time when that company is going to move. So it is usually those 3, 5, 7 days in a year when usually the small caps do that 20% kind of a thing, when the results are good or something which we've anticipated changes. So I think the usual construction of portfolio is between 10 and 15 stocks, where we deploy about 7.5% to 10% each stock. And yeah, so after doing the kind of research and the kind of groundwork we do, like we don't only meet the management, we also visit their facility, we talk to their raw material supplier, we talk to their end clients, we also talk to their bankers, so to avoid any red flags. So if we are able to do all that, and after doing all the due diligence, if we are investing, then we don't usually give 1 or 2% allocation to a stock. It is usually 10 to 15 stocks. It is a concentrated portfolio where 7.5 to 10% is allocation per stock. We don't go above 15% per stock, and we don't go above 30% per sector.
Okay. So in terms of diversification, before I come to the performance side, in terms of diversification, you have sort of bottom up approach, or it's more of top down approach, or how do you construct the portfolio there?
So as I already mentioned, there are 3 to 4 sectors where we are very, very bullish. So it is usually between those 3 and 5 sectors where we are bullish. We look at companies and usually we don't take more than 1 or 2 companies. So manufacturing itself is such a big base. EMS itself is such a big base. Your hospital, healthcare again is such a, so every industry has more ancillary businesses and lot of divergence in terms of kind of businesses in a particular sector many companies can do. So we usually try to play the proxy. So when I say data centers, we will not invest in a company who is directly making data centers, but invest in a company who might be providing cooling solution, who might be providing cabling solution, or so on and so forth. So it's usually we try to play the proxy or try to play the ancillary of that business who will have a consistent record of uh, consistent order book and so on and so forth. So
Okay.
yeah.
Okay. Now coming back to performance, so I want to understand when you started the strategy, what was the target which was going on in your mind? Is this because these kind of 45% kind of CAGR in the last 5, 6 years? Did you plan?
Let me clarify here, which I always tell all my clients, the past 5 years were exceptional post-COVID. So world before COVID and post-COVID are different worlds. So previously we used to talk about AD and BC. Now it is pre-COVID and post-COVID. So post-COVID, we have seen, a lot of things materialized because everybody was sitting home and trying to make things efficient. So Zerodha came in and transformed account opening. So that was one of the biggest breakthrough. I think, previously when we used to open a demat account, we had to contact a broker, fill a form, sign and send it to him. He used to verify and then open. But after Zerodha opening it seamlessly online, where you can sit in your house and in your room and within 5 minutes you can open your account and start trading. So that was a kind of revolution which happened. So I think a lot of things changed after COVID for the stock market, and these 5 years were exceptional. And I don't think, I tell all my clients, my past record cannot be a benchmark for my future. We will obviously try our best to deliver the best. But again, as I said, I tell my clients the expectation from us should not be more than 15 to 18% because the risk-free return in your bank is not more than 6-7% in FD, where you are again paying 40% tax. And because of our low churn ratio, low and long holding, that there's a lot of benefit that you get because of low brokerage and low tax rate. Plus, our internal target, as you asked, okay, what we think while deploying in a particular company is if we can clearly see that in next 3 years the company will double. So 25% CAGR is the kind of internal target we keep for ourselves, where that is what we would like to deliver to our clients. And God has been kind and the market has been extra good that we've been able to deliver 45-50%. But that is I think not going to be for a very, very long time.
Okay, okay. So now that you have a full-fledged team, so do you have analysts working for you in within your organization, or
Yeah. So as
yeah?
I mentioned, so I have 4 more fund managers and I have 3 analysts. And also we have we do ground research. We are in touch with a lot of companies, and many times a lot of our companies give us references of other companies. So when we meet a company, we talk to them about everything they are doing. So many times their raw material supplier also can be a potential company for us, and their end client also can be a potential customer for us. So getting into fewer companies but deep diving helps us identify more companies. Yeah, but the team of 9 people is already is there, and extensively doing what we do because we invest in small and micro cap companies. Little more diligence is important, as Warren Buffett has mentioned, never lose money. So whatever we do, we cannot lose clients' money. So when we, as you also understand, in prop money you can take certain risks, but when you are investing clients' money, you have to be 3 times, 4 times more cognizant of what you are doing. So we try and do as much as due diligence we can, and try to avoid all the red flags and If we are convinced 100%, then only we invest.
But Vijayji, how do you navigate the time like 2018-19 when we saw small cap index were down about 62.5%? Some of the companies, and 2017, in fact, it started December onwards. Then you started your PMS in 2018-19 times, and that was a time it was going down, down, down till about COVID time.
In the COVID 3 months, we were down 36%. Being, we started investing in 2019 Feb. So in 2020 March, we were down 32%. But as I told you, okay, I was choosing my clients the way I was choosing my stocks. So I'm very, very thankful to all the clients that they did not call me, or they did not get worried, and they believed in the long term India story and held on with us. So anybody who invested pre that also has done very, very well in terms of returns. And yes, they have referred more clients, so that is how we have grown. So existing clients who made money has referred more clients, and that is the best way to grow, I think. Slow and steady, but yeah.
Yeah, that's the best way. This is how we've also grown, and this is one of the important learning for us when we were looking at those time frame from 2017, 18, 19 onwards. We saw that mid and small caps, they were falling down to the tune of 40, 50 odd percent. We went back to all our clients, handhold them, given complete rationale behind that why we are so confident that things will revive, and eventually post COVID we saw that how market bounced back and
If
investor got their returns.
you have a company which you think can, sustain in the market and in the environment given across for 10 years, then I don't think you can lose money. It is only about the kind of procedures and processes the company has, and the founder has to be very, very resilient, and low debt, and those basic things you have to see. COVID can come anytime. There can be another catastrophe which can come, maybe because of the US, because of US China, because of anything. But as far as you are invested in good companies with low debt and decent growth, then I don't think you need to worry for those short term volatilities.
Right. And when we allocate money to, Wallfort PMS, especially the diversified fund that we look at, we tell our clients that
From
minimum.
day one, that is the oldest fund, and that is the one I manage directly
Okay,
for last
diversified.
6 years. Yeah.
Okay. So we tell our client that you should have a horizon of minimum 5 to 7 years, and and if you have anything less than that, this is not the fund for you. I mean, I'm
Absolutely.
very, very open and clear, and this is getting recorded here, and all my team members who are allocating funds, we tell our clients that look, anything can happen. What you rightly said, you have to be mentally prepared, but at the same time, we don't expect that. But at the same time, if anything happens, we have to be mentally prepared because
So
this is small and micro cap.
I'll tell you a small story. So when I was starting, Abhinandan Lodha, who is one of a very, very dear friend, and I told him about this, and he said, "Okay, he was one of the first clients of mine," and he told me, "Okay, I told him I want money for longer term, and I'm not going to return this money to you. I'll give it to your daughter." And he said, "Agreed." And he said, "Okay, my daughter is 11 today, and she will turn 21 in 10 years. So 10 years, this money is with you. The day she becomes 21 and she wants to start something of her own, that is when you have to give her this money." So that kind of confidence, that kind of long only money helped us choose our stocks also well, and gave us that longer term path. As if you see, when you have a clear road in front of you, when you are able to see very, very far, you are able to speed up, right? Compared to if you have fog in front of you, you drive slow. So when I had a 10-year path in front of me, I was able to do certain things and do them well.
Great, great, wonderful,
So he's
wonderful.
also on the advisory board of Wallfort PMS. So
Okay,
yeah,
okay.
recently this year only he's joined us. There's another gentleman called Mr. Shankar Jadhav, who is ex BSc MD. He is also on the advisory board of Wallfort PMS.
Okay, okay. So do you also have plans to launch AIFs in the future, or you'll continue to focus only on
So
PMS?
we have already filed the PPM, and hopefully in next 2.5 months. So our target internally is 1st of January, but hopefully we'll start earlier. So there will be a AIF again. Wallfort Diversified Fund is the name of the AIF. Wallfort PMS is going to be the
Same name.
investment manager and sponsor. And yeah, the strategy there is going to be more or less same, but with 25% will be unlisted securities also. So private companies which are going to IPO in next 2 to 3 years, we are going to make a portfolio with 75% listed and 25% unlisted portfolio. That is what the thought process is right now.
Yeah. Now I was coming to that, and you answered yourself. I wanted to know, because you cover some of the micro cap companies, and do
Yes.
you also track some companies in SME BSE index also, Vijayji?
SME, NSE, BSE, yes, we do track. As I said, it is not about the company. In that small companies, it is usually only the founder. You know what kind of, so first generation entrepreneur who has already struggled for last 15, 20 years, who's seen one or two cycles in that industry and still grown to the level where he has, is what we try to look at. And if we think, that he has a perseverance and the resilience to sail through the storms, then yes, why not?
Okay, okay. So, but then those would be less than 500 odd crores. I mean, one or two exception can be made.
So as I said, in my previous answer also, I told you, until and unless there is a complete exception where we are 100% confident and it's available at a very, very reasonable valuation, and where we see the next 3 years are clearly visible in terms of the kind of growth it is going to have and all those, then we do take smaller bets also.
Hmm, hmm. And through this AIF, you can also kind of do anchor investing, participate in QIB if you wish to, depending
Yeah.
upon opportunity.
As of now, that is not the thought process. So I believe, the founder will never sell anything cheap. The entrepreneurs also know how to derive value, and the merchant bankers help them. So if he is not going to sell cheap, we are not going to buy expensive. So that combination what we really have, I think. So I think once the company is listed, once it's seen the market for 2, 3, 5 years, is when we usually try to come.
Mhm. So again, coming back to the strategy diversified, other than diversified, which are the other one that you like, or that strategy is managed by whom within the platform?
There are three more funds. One is managed by Kaushal Kedia, which is the Avenue Fund. There is a Maya Fund, which is managed by Yash Somani. And there is a Contra Equity Fund, which is managed by Abhishek Shah.
Okay. So all three of them report to you because you are CIO of the organization. So
Yes.
okay, but they have their own thought process in place in terms of, like,
So,
Contra will have contrarian views on the market. Is that correct?
yeah, to contrarian view, a little bit of thematic where they understand some sector very, very well. So that also has some little bit more focus on particular sectors is also there. But
Okay.
more or less, everybody's thought process in my whole team is aligned where we want to create value for all our investors who are with us. And yeah, but obviously, when you have more minds, you are able to avoid more red flags. So that is what we try to do. Once you avoid your mistakes, the alpha is already created. If your one of your company also is not uh, dying, or is not getting delisted, then automatically you're better than the others.
Right. So how do you guys select the stock? As in, do you have an investment committee where you discuss, debate? For example, one of your contra manager, Abhishek, you said Abhishek, right?
Yeah.
May have a different opinion on a particular company or a sector than
Right.
you. So do you
Yes.
all believe in this kind of
So I
open?
think he has to convince me, or I have to convince him. But usually we are able to do that, as if he is missing out on something or I am missing out on something. Maybe I have not looked at some certain aspect, or he has not looked at certain aspect. So we very cordially sit across and discuss and debate, and yeah, अभी तक तो there has been no problem where where we had different of opinion or something like that.
Okay, okay. Now I'm just
Because
asking
our
because
interest is only making more money for our clients. So as far as your interest there is aligned, then I don't think there is any chance for debate or discussion.
right. No, I was asking is that there are times when probably my individual view on a particular sector can be more bullish than my colleague who may be bearish on the on the sector or a company.
Yes, like, diversified is directly managed and completely looked upon by me, whereas the other funds have a co-fund manager who have their own ideas, so they can, it is basically they are the performer there. I am just overlooking where I can add value. I am telling them, but other than that, they are individually all capable people who have been in the industry and the market for long, and they are all fantastic guys. That is the reason we collaborated and we are working together.
So at a platform level or at a strategy level, say diversified, how many stocks that you'd like to keep going ahead, say three,
So
5 years point of view?
particular portfolio, it will not be more than 10 to 15. Only very few portfolios where the client is very, very clear that he doesn't want to see too much volatility. There we do 20 stocks, which is 5% each stock. But other than that, it is usually between 10 and 15 stocks only.
Okay. So Vijay, one of the question that we keep getting from our client is suppose you have 10% of exposure in one particular company and God forbid something happens to that company and then let's say it's down by good for 40-50%. So
So I
how
will
do you
client and ask him for more money to invest more in that company.
sure. No,
That
certainly
is good. Yeah, until and unless we are completely convinced on most of the things. And yeah, so one more thing, we have a strict stop loss of 25%, where if a particular stock, after doing all the due diligence and all the checks, if it is down in a stable market more than 25% from our cost, we will square it and we'll, it's easy to make 30% again. But if it goes more than 50-60% down, as you mentioned, then recovering 100%, 150% is a very, very difficult task. So we don't argue with the market. If we can go wrong. I mean, there are certain stocks where we have done mistakes and, we got out at 20-25% haircut. But that's okay. That is a part. I mean, if I could get everything right, then I would not be managing others' money.
right. Now there are two things here. One, you said that there would be a possibility that the stock is doing, I mean, the company is doing good, the earnings are intact, but the it is not reflecting in terms of stock price.
So many times it is an external factor. So I'll give you with example.
Hmm,
So in 2020, we invested in a company called Shakti Pumps,
hmm, hmm.
and in a year's time, it went up to 900. And then there was a bull cycle in the commodities in 22-23, where the raw material prices shot through the roof and government did not, appraise the price in between. So Shakti Pump went down from 900 to 300. But because we knew it is an external problem where the raw material prices have gone high and they were not executing orders because of that. But as soon as government revised the prices next year after 6 months and the raw material prices crashed, the profit shot up. So you have to understand, if you understand the business and if you know okay, it is an external problem and not an internal problem, that only can happen once you know exactly what business company is in and what are the nitty-gritties of it, then you are able to take that call very, very easily. If it is because of some day when the seller is very, very desperate because of any other reason, it is an opportunity for you to get in that time. So if it is an external factor, we add on to the position. If it is a problem where the market is stable or going up and your stock is falling, then you have to understand something which is beyond your understanding and you should not argue with the market. So 25% is a strict stop loss from our cost price.
Right, right. So these 10-15 names that you talked about, they're supposed to be a very high conviction ideas, of course. And so do you, I mean, you do first-hand research. And other than that, I also want to understand what kind of research that is done by your team, because you have a team of analysts. So do they one go to meet the promoters, and apart from that, is there any channel checks or something like that?
That is what I mentioned. So we meet the founder, we talk to their raw material supplier, we talk to the distributors, we talk to their end clients. We also have an interesting thing where we try to find out any connection where the promoter has dealt with somebody in the past, because of our large network and the we have 35 years of experience in the market, so we know most of the fund managers, so we usually try to get a opinion from an expert of that particular sector also, in terms of how this company is doing, about its balance sheet, about its end clients, and lot of things. So all the channel checks I cannot alone do. So there is a team required to do all this, right? Right up to the bankers, to the raw material suppliers, to plant visit. I cannot be everywhere. So it is the team who does that and gets it to me after looking at everything and discussing with them, is where we build our conviction and then take a bet.
Yeah, even some of the fund managers I remember, they prefer to speak to ex CEOs of the company,
Yeah.
so they get to know what's happening in the company and what was the reason that CEO decided to resign.
Absolutely.
Now, coming back to my last two or three questions, so it is very interesting to interact with you, Vijayji. So from a valuation perspective, small cap used to be at 17 ka P, 18 ka P before COVID, which is now trading at about 26, 27. So 1 year forward that I'm referring to. So just want to understand your views there, that do you think these valuations are justified, or some people have sort of different opinion that markets can correct. So what's your views on that? Two questions.
Markets can always correct. As I said, volatility is part of the game and nobody can avoid it. But as far as you are able to find companies where you are comfortable with the valuation and with the kind of growth it is going to achieve in next 3 to 5 years, I don't see any problem. So as a country, we are well placed. As a political stability, we are well placed. As a RBI, the kind of reforms the RBI is doing, the kind of GST reforms that the government has done, the kind of tax reform the government has done, I think all those things are going to trickle down slowly and steadily. We are seeing low earnings growth for last 4 or 5 quarters, I think, and which can continue for maybe 1 or 2 quarters. But eventually, things do stabilize. So as and when that happens, you just have to not overpay. You have to avoid FOMO investing. You have to avoid, that those kind of investing. If you are able to sanely look, analyze, and then invest at a valuation where you are comfortable, then there is no problem. I think, overvaluation, I agree, compared to the rest of the world, we are overvalued. That is the reason FIs have been selling left, right, and center. But I think, I believe a time correction would be a better thing for all of us if that happens, instead of a price correction. So maybe 1 or 2 years go where we are not doing anything, we are sideways, and then maybe the valuation becomes good again. So that is the hope which I have. I'm not sure what will happen, but that is the hope which I have.
Great, great, great. Absolutely pleasure. But let me flip the question here. Maybe a little difficult time for you, Vijayji, but sorry to ask you this question, because I keep getting this question from my investors. So I'm doing a devil's advocate here. So suppose this small cap P goes beyond 30, 35, suppose, and we said that we'll never take the cash call, or you said that I don't see country like India, I'm going to take the cash call. Will you stick to the same statement if the
So
situation?
I don't know, if you go and see the formation of a small cap or a mid cap or a large cap, there are very few companies, like there is Nifty 50, which is constituting, and whichever companies are doing well usually come there. So the small cap portfolio is more than 3,500, 4,500 stocks,
True.
because your just 100 stocks are large cap, then there are mid caps till 250, and then there are small cap.
When it
So
opens
the
up.
small cap is like, your BSE 200, BSE 500, those stocks are, uh, you know are getting expensive, where everybody, as I told you, are tracking those tops. The top 1,000 companies which are being tracked, those are getting expensive. But in the same sector, there are many companies which are available at better valuation. So as I said, all the time, all the sectors will not do well. There will be some sectors which might be facing the headwinds right now, but in next 2 3 years should be able to turn around. As we know the cycles. So if you are able to catch the cycles right, there are some sectors, some stocks always available at the valuation you have. And I am not managing trillions of dollars that I have to find many companies. As I said, there are 140 crore people. There are so many companies. You just have to identify few founders who have better, understanding of their business, better capability to run their business. If you are able to find those, I don't think. I mean, yeah. So that is the answer. I think something is always available. It is just about how much deeper you go and how much more research you do.
Great, great. With that, would like to conclude the session here. It was wonderful speaking with you, Vijayji. Thank you so much. Uh,
Vikasji, thank you for the lovely session, and I hope it benefits all the people who listen to this.
certainly,
And
certainly.
forgive me if I have said something wrong.
No, no, nothing like this, sir. So, thank you. It was pleasure speaking. Thank you. Bye.
Thank you, Vikasji. Bye.
Thanks, everyone. In case you have any more questions, please feel free to reach out to our team and they will help you answer those questions. Thank you.